Hello on this funky Thursday in this wonky market world and crypto. Oh my God, there's a lot going on. I want to cover some shit happening from crypto.com, the exchange, and how we're moving forward with on-chain data. Let's get right into it. So there's just some absolutely crazy shit when you look at the charts. And this is Chronos, the blockchain that powers crypto.com. And well, shit, we have this. We've got this 7-day number of 124%. Like, what the fuck? And Chronos is a blockchain that's made to facilitate a centralized exchange. So what does it really do? Hard to say. It's really an incentive or a loyalty points kind of chain. And we can see here that this asset is standing out on its own. And it's kind of like, well, why? Because when we look back in time, back in 2022, there was this really big 2FA exploit at crypto.com. They did fix this. They added back in two-factor authentication, but word on the street is that this was actually much bigger than they're letting on, that the reality of this hack, or at least a subsequent exploit, if not this one, was pretty effing big and swept under the rug. Now, this doesn't give us much information, but they did move on to this very sketchy action, which happened earlier in the year. And now, back in 2021, crypto.com did a 70% burn. This means they took 70% of the assets out of circulation and they sent them to a burn address, or an address without keys, no access. Now, what's really sketchy is that very recently, within the last year, the DAO opened up a vote to unburn these tokens. Now, as with many DAOs, and especially sus when you get into centralized organizations like a SEC, the primary token holders are usually the corporation itself. And they came out and they pushed through a vote to unburn this 70%. Suddenly you have a 2.3x increase of CRO that hit the market. And it's just kind of like, was this really a community aligned decision, or was this coming from just the central entities? And this would usually be a terrible event, massive dilution, right? But we see that the Trump family comes out with a crypto.com sponsorship. And Trump Media says it plans to purchase 105 million worth of CRO. And they're doing into this company, Yorkville, that said the total expected funding for the company's treasury will be $1 billion worth of CRO, or about 19% of the token's market cap, plus $420 million in cash and equivalents as a $5 billion line of credit. So they're getting this ridiculous line of credit, and Yorkville is actually going to back its way into the stock market. And sure, this has something to do with the pump, but like, let's be real. We know how this shit operates. They give a lot of money to World Liberty Finance, and in return, they get this buy-side pressure. Surely the Trump family has to be making more money off of this than they are getting. So what's probably happening here is that crypto.com, which should have a decent balance sheet, they are an exchange after all. It's a very lucrative business model. My assumption would be that they're giving a large payment to the Trump family, either by buying World Liberty Finance and supporting that price. Remember, that thing is going to be tradable soon, as well as setting up a digital asset treasury to stash a lot of these tokens inside of, and then of course use the retail market on the stock market to dump their value. So we can take these bullshit tokens that were just unminted out of nowhere, we can wrap them in a publicly traded entity, and we can dump that equity on the market. What happens with those tokens is completely irrelevant. So it's all really sus. But that being said, smart investors should be looking at it and doing the opposite of what's going on here. So like, what is the inside grift just so well known that players are indeed accumulating because they understand that maybe they can buy these assets OTC, maybe they can buy them locked, I don't even know, and give them to this digital asset treasury, and then again take that exit on the public markets. It's not a great trend. It's something that's becoming increasingly suspicious, and well, who the fuck knows what's going on with Chronos. Now, one thing that is absolutely crazy is this Google announcement of building their own L1. We have Omar coming out here sort of talking about it. I didn't have the original tweet, but this has the things that I want to see. And when we open this up, what we can clearly see is that everyone is gunning for the throne on the future of payments. What's fascinating to me is that none of these are banks. If the banks are going to get in this stablecoin game, and we know that they're salty as fuck about the yield, that, well, they're going to be competing against some very established players in the product land. And when we look at it, we have Stripe, Circle, Google Cloud. Comically, Circle, the most OG stablecoin provider, does look by far the weakest here. And why is that? Well, we look at this thing. Stripe and Circle, both Ethereum virtual machine L1s. Now Google Cloud comes out and says planet scale blockchain Google developed L1. My attitude towards this is Google probably doesn't care about interoperability with the existing chains because they themselves are so effing large that they're like, we can bring our own scale. That being said, they're great developers and they may have bridges coming out and native asset swap features and cross-chain mechanics. Who really knows? But Stripe here does have millions of merchants while Circle has no direct end user relationship, right? USDC activity is scattered across multiple chains. Of course, the features, Stripe payments, the full stack, wallet onboarding with Privy, which they acquired, off-ramps through Bridge, and features is USDC as native gas, sub-second finality, blah, blah, blah. But Google's coming out looking towards the future saying, hey, we see that blockchain's being adopted. Let's build for that future that is coming. So it's built for finance, native commercial bank money on chain, Python-based smart contracts. They are building for a language that is widely written and very accessible. The EVM is in Solidity, and a lot of devs do not like it. Now, the thing that really sticks out to me here in the competitive drivers, neutral player, 24/7 market caps, infra AI, expanded payments, and agentic capabilities. It is so obvious that they are building something with an AI focus forward. Remember, AI is going to use the digital money formats. There is no world where AI signs into a bank, creates an account, and goes through that literal paper back end. Why would it dip itself out of the digital world? It makes absolutely no sense. So Google's coming in hard. And to me, this is just icing on the cake that blockchain has won. There is no competition anymore. The old banking system, it is done. Anyone that understands this is looking forward, and on-chain is where we are going. Now, we can look at the stablecoin battle, and of course, Stripe and Circle and USDT Tether and Plasma, they're all going to be fighting for this. But the L1, that's compute. And let's be real, these L1s are going to access decentralized storage networks so they can have the cloud spread across the world. All of this increases the anti-fragility. It increases the transparency. We're going to have accounts associated to specific wallets, right? Everyone can back up and control their own data from the local user side if they want, but likely we're going to have a Google login to get through to this. And of course, you can put that Google login behind 2FA. There's already tons of ways to protect your computer against hacking and exploits and make sure that it's only locally loginable. So this is so massive, it's hard to underscore. And here we have a post on LinkedIn from Rich Widman, the head of strategy Web3 at Google. And he says, all this talk of layer one's blockchains has brought Google's own layer one into focus as a product leader in crypto. And they are the Google Web3 suite is fantastic. They've been building tooling for all sorts of chains and all sorts of developers. Now they're coming out pretty clearly that Google brings together years of R&D work at Google to provide financial institutions with a novel L1 that is performant, credibly neutral, and enables Python-based smart contracts. They want people that are writing in Python, the most dominating of the languages, to come in here and be able to access this new world. That's why institutions like CME Group choose Universal Ledger to explore tokenization and payments on one of the largest commodity exchanges in the world, leveraging this GCUL. Besides bringing to bear Google's distribution, GCUL is a neutral infrastructure layer. Tether won't use Circle's blockchain, and Aiden probably won't use Stripe's blockchain, but any financial institution can build with GCUL. So they're saying we're actually going to take a step back, and all of these stablecoin providers are going to fragment. We are going to expect to see the fragmentation of these payment networks as they compete, and screw that, we're going to take a step back and be compliant and compatible with everyone. This is enormous. Blockchain has won. It is clear as day, and it is very exciting. Now, moving on from there and only further bolstering the victory of blockchain over old school ledgers, we have the US Commerce Department coming out and saying, hey, we're going to post second quarter gross domestic products to the blockchain. It's only fitting that the Commerce Department and President Donald Trump, the crypto president, publicly release economic statistical data on the blockchain. We are making America's economic truth immutable and globally accessible like anyone before, cementing our role as the blockchain capital of the world. And everyone has to admit that 3.3% GDP growth is impressive, Secretary Howard Lutnick. Well, this is what's going on. They have this Oracle partner in Chainlink. Chainlink makes oracles. Oracles take real world data like the price of oil or commodities or something like that, and it prints it on chain so that smart contracts can access that data and obviously execute whatever the hell it is that they're doing. So US Department of Commerce, Chainlink, any blockchain. What's really funny, and it kind of comes out from Gabe Shapiro in this thread, is that, well, wow, you're publishing your data to the blockchain, but in reality, it is just a SHA-256 hash of a PDF PDF. What the heck does that mean, Graham? It means they're taking their GDP data, they're writing it into a normal document, a PDF, they're compressing that into a hash. SHA-256 is just a cryptographic proof, a protective mechanism, and all we're really getting is putting a PDF on chain. In many ways, this is akin to an NFT and all the lulls that come with. What in reality would be super exciting is if the data itself, and it's kind of weird that they have an Oracle provider because this is what Chainlink does, but we would like that data to actually publish to the blockchains in a way that these smart contracts could enter in there and pull that information, because we want to enable those smart contracts to operate off rich GDP data. A copy of an image of a PDF on the chain, I mean, that's cute, you're storing it, but it is just a photo of the data. It is not the data itself. And what we would really take value from is the data coming on chain and being accessible to these smart contracts, to these AI bots. And that is the DeFi world that we will see moving forward. So whether it's the ideal format or not, that's irrelevant. What we can absolutely see is that blockchain is winning. Whether crypto comes with that is hard to tell, but we are taking baby steps coming from the government, publishing that data. That data is currently being published in sort of a facsimile of a fashion, just a simulation of the data, not the data itself. It's not accessible for computers to read, but we're moving in that direction. That's obviously what Google is building towards, and the agentic preparation is the next level. Just as Perplexity has been putting out that they want to take on Google and change the way that search looks, it is clear that we will no longer use search engines to type in a query. We will speak directly to our phone. We will talk to our personal agents. We will have some sort of natural user interface, a NUI, and that we are going to be accessing the digital world the same way we communicate with humans, whether it be through voice, through visual, through touch, heck, even through taste. So that being said, it is an exciting time. Who knows what the hell is going on with CRO? I will give their community this. They got some great memes, but it is suspicious as hell, and I am really starting to get suspicious of this digital asset treasury model. There's a lot of locked assets going in there. I mean, if you can just mint more tokens and throw them into one of these vehicles, we are moving farther away from true ownership, from true value, which is what Satoshi's grace bestowed upon us. So there will be plenty more scams to come. Hopefully these things don't blow up to the tune of FTX, but we always get some pop to each and every bubble. That being said, it's hard to see if we're going to have the same kind of bubbles with the institutional bidding capabilities through the ETFs. So all of this is flattening. That does mean volatility should flatten a little bit, or we'll see traditional stocks reflecting the volatility of crypto because high frequency trading bots will be so immediately responsive. The future is unfolding in front of our faces. Finance is changing. Payments are obviously changing. And soon we'll be able to basically text message, make a gestural flick, or just say, hey, Graham agent, send my homie 20 Oogle dollars. Who knows what's coming, but it is certainly exciting. Stay out there, stay positive, stay optimistic, don't lever up, and I will see you tomorrow.